Thank you. Good morning. Thank you for joining SPE Lagos Section in today's webinar, 360-degree Personal Finance in Times Like This. My name is Princess Ofor, the Publicity Chair, SPE Lagos Section, and with me also is Stella Itayo, the Membership Chair, Assistant Membership Chair, SPE Lagos Section, who would also be co-hosting this webinar. Before we progress, we would just like to share a few safety tips with you. We know that the pandemic is on and there are protocols to manage it. So let us ensure that we wash our hands frequently, use an alcohol-based sanitizer. Let us endeavor to wear a face mask when we are in public, and also ensure that we practice social distancing. Let us avoid large gatherings as much as possible. And if we feel any COVID-19 symptoms, let's endeavor to self-isolate and call NCDC on the toll-free number that is showing on the screen. Now, today's webinar is on 360-degree personal finance in times like this. And there could be no better person to take us on this webinar than Adebola Agumbiade, who is an economist, a chartered accountant, risk manager, and financial advisor with over 18 years working experience in various aspects of accounting, finance, risk, and asset management. She's the Managing Director and CEO of Candor Crest Africa Limited, a company she set up in 2019 and has grown to an asset base of almost 1 billion naira. We'll welcome Adebola Ogumbiade to the virtual floor to take us further on this webinar, 360-degree personal finance in times like this. This is Adebola, please, over to you.
Good morning, everyone. Good morning, everyone. Good morning, Mrs. Ofor. Good morning, Ms. Stella. Good morning, Mr. Oyere, and everyone. Thank you for inviting me to this meeting, to this seminar. I believe is a very welcome topic at this point in time, where the whole world is basically maybe in disarray. As I was preparing for this seminar, I had the chance of speaking with someone, and the person told me that, oh, you are going to speak to SPE. These are serious-minded people. They will just want to hear what you have to say. So you don't need to go about parabolating. So I'm happy to be in your midst, and I'm happy to present this topic to you. So sometimes in 2019, I was just thinking, when this pandemic started, I was just thinking all over, thinking about her business, and I started thinking, oh, what if this pandemic continues for about, let's say, 2 years? Can the company continue to pay its obligations? Can the company continue to pay its staff? Can the company continue to exist in the midst of it? And we did a what-if analysis scenario, and we find out that even if the pandemic continues like that, we should still be able to meet all our obligations, pay the full salary of our staff. But you will quite agree with me that there are so many organizations that during this pandemic have had to cut down the staff salaries from about 100% to 50. Some had to lay off some staff. Some some had to look inward and look at how best to address the issue. So if the question now is that if, for instance, those people are laid off, or for instance, their salary has been reduced, then it means that they will all not be in the position they were before the pandemic started. So the topic of personal finance is something that is relevant at this time, even has always been relevant, but we have not been taking it for seriously. So today we just want to take a look at what personal finance is all about, what 360-degree finance is all about, how best we can manage our personal finance, how best we can sustain our finance, how best we can create wealth for ourselves. So in order to do this, it is important for us to know, most of the time, the question we should ask ourselves is that, why does an organization continue to exist for perpetuity? You know, organizations are a going concern. So the question is that we should look at ourselves as being an organization. By the time we look at ourselves as being an organization, then we will know that we will have a better way of planning ourselves. For an organization to continue to exist, there are a lot of work that has been done by the management of that organization. So but we want to look at it in terms of personal finance now. So personal finance is a very important topic, and every one of us, we must take it as being serious and take it as being something that we really want to go into. So because if we are not careful about our finance, it can have a lot of impact on our lives, on the life of our loved ones, on the life of our children, on our health. We've seen so many people that went into debt and end up committing suicide. On our security as human beings, we feel it's not financially able to meet up our obligations. So personal finance, that background, we must understand that personal finance is a very important topic that everyone, no matter who you are, whether you are just entry into the employment scale, or you are in the middle of your career, or you are even at the peak of it, everyone, no matter the level you are in life, personal finance is something that you need to learn and you need to understand very well. So I'll just take us a brief, because I'm speaking with engineers and I don't know who our other audience are. So I'm just going to take us a brief. The American Dictionary defines finance as the management of money, or the management of money belonging to a person, group, or organization. That tells us that it is not only an organization, a government, that should manage their funds. So it means that as an individual, I, Adebola, should also manage my finance so that I will be in a better position. So I just said here, we said personal finance has three categories. Finance has three main categories: personal finance, corporate finance, and public government finance. But here we are going to dwell on only personal finance. So I've taken my time to look at people's definition about what personal finance is. So because if we don't have understanding of what personal finance entails, we will not know how to better manage our assets, or how to better manage our network. So the first thing that someone defined, personal finance is the process of planning, managing personal financial activities such as income generation. So it means that you are managing your income generation, you are managing your spending, you are saving, you are investing and protecting that same finance that you have. So that is what someone said about personal finance. Another person said personal finance is a term that covers managing your money as well as saving and investing. It encompasses budgeting, banking, insurance, mortgages, investment, retirement planning, and tax and estate planning. That's someone else's definition. So, but I have this definition. While I was preparing for this, I had a discussion with my husband, and he just told me that personal finance is all about creating wealth for yourself, sustaining the wealth you have created, and growing that wealth. If you look at all these definitions, you will see that all interwoven. They are all speaking to the same thing. So in all those three definitions that I've given you, they are all saying that, from the definition above, they are all saying that, oh, personal finance is about my income. I want to know my income. How much am I earning from these sources, from that sources, from these sources? I want to know how much am I spending from that what I'm earning. I want to know how much am I saving from the income. I want to know how much I can invest and how well I can protect this asset. So in the light of this definition I've given, so the presentation is going to be in three categories. Now, the first category is that how do I create wealth for myself? How can I create wealth for myself? The second one will be, how can I sustain the wealth I have created for myself? The third one will be, how can I grow this wealth I have, I've created and I've sustained? How can I grow it? Because if I've earned or I've created and sustained about 300 million and I fail to grow that 300 million, I will remain that way in view of inflation, in view of currency risk. I'll be worse off than the 300 million I've created. So we are going to look at these three areas. How can I create my wealth? How can I sustain it? And how can I grow the wealth? I have about 30 minutes for this presentation. And as I said earlier, engineers are serious-minded people, and serious-minded people want to ensure that they meet the time deadline. So I'm going to rush us through what the thought that came to my mind while I was preparing for this topic, 360 degrees personal finance. So the first thing, if we look at an organization, I told us that when we are looking at personal finance, if we don't look at ourselves as an organization, we might likely not achieve the aim we want to achieve. Why? If you look at Dangote, who is now about 10 point something billions dollars in net worth, you will look at that. He is not staying where he is. He's trying to invest more to be able to get more money to increase his net worth. So the first thing you will do, if you want to really understand what personal finance is and know how to sustain your wealth and know how to grow it, the first thing that is important for you to do, you will sit down and first of all develop your statement of net worth. When an organization is going to be set up, the first thing they do is they develop their statement of affairs. Now, as a personal person, as an individual, the first thing you need to do in order to better manage your wealth is first to develop your statement of net worth. And statement of net worth is quite simple, very easy to prepare. You don't need to be an accountant to prepare it. So what is statement of net worth all about? Statement of net worth just gives you your financial position at one particular point in time. So if I want to know my statement of net worth as at December 31, 2020, I should be able to say, this is my net worth in total as a person. you know, or if I want to know my statement of net worth as of January, today being 27th of 2021, I should be able to know what my statement of net worth is about. So statement of net worth shows your financial position at a given point in time. It shows what it entails. It just tells you two things. How much do I own? What you own is something that is entirely to you. Nobody can say, I'm the legal owner of this thing. That's the meaning of what you own. So what you owe is what the obligations you have to people, to third parties, to banks, to financial institutions, to maybe to your landlord, to whatever you might call it, to your friends, to your family, you know, that is what you owe. So the statement of net worth just tells you that, okay, I own this total as an asset, and I owe this total as a liability. By the time I check the two, my assets, which is what I own, and my liabilities, which is what I'm owing people, I'll be able to know my total net worth. And it's simply calculated, my total assets less my total liabilities, or simply put, what I own less what I am owing people. So that is what statement of net worth. That statement of net worth helps us in so many ways. It helps us to determine whether that we're really managing our resource very well. It helps us to know how to plan for the future. It helps us to know whether there is a need for a restructuring of your statement of net worth, a restructuring of your assets, a restructuring of your liabilities. So that and a whole lot of things. That is what the statement of net worth will help us to achieve. Now, the question is, there's a table that says what can you determine as your statement of net worth. So you have some when you're preparing your statement of net worth, it's important to also prepare them in order of liquidity. In order of liquidity means that, oh, can this asset be easily converted to cash? So if I have these total things that can be easily converted to cash in case of emergency, in case of, you know, something, so unforeseen circumstances, I can easily convert this asset to cash. That is, you divide them, you categorize them into different kinds. The one that can be easily converted to cash, the one that can would take time to convert, and the one that may take very longer time to convert to cash. So you can divide your assets like that. Then your liabilities also like that. Current liabilities, which is within 1 year, and then medium and then long-term liabilities. So by the time you look at all this in a row, and you're able to see that, okay, for instance, this template XYZ statement of net worth shows that it has a total statement net worth of about 362 million. In this 362 million, it has about 77 point something in liquid assets. In investment, it has about 54 point something million in investment, in shares and all that. Then in properties and all that, it has about 200 million in properties. So the question that ask yourself, is this better? Because you are looking at it that, okay, this is my statement of net worth. Is this a good position for me to be? So the question you have to say is, okay, you say your liquid asset includes 76 million in pension. Can this pension be easily converted to cash? The question is no. How many percentage of it can you, in case, okay, let's assume I lose my job, and I lose my job now, how will I be able to sustain myself and my family if, you know, if the only liquid asset that I have is something like 2.5 million, And I'm looking at myself, my total expenses in a month is about 700 million. So if my 700,000, sorry. So if my total expenses is 700 and I just have about 1.7 million in liquid asset, that means in 3 months time or so, I'll be jittering if I'm out of employment. So that is the whole essence of statement of net worth. So to help you to further understand how you will better, plan yourself to be able to be in a good position that even in the event of COVID, in the event of anything, you and your family are still in a good position to continue living your life as you were before that incident occurred. So because of time rushed down now, so if you look at it now, I said, so when you look at what is obtainable, the rule of thumb rule, the rule of thumb, it says that, for if I'm starting, if I am just going into an employment, I'm in my 20s and in my 30s, for instance, that maybe I'm not married by that time, So what are the expectations for you to know whether your statement of net? Okay, so the first thing is that you have to aim to save at least 100% of your salary. So if, for instance, I'm earning 10 million per annum, so your aim in terms of savings will be to save about 10 million if I'm within this range. So on a monthly basis, you can decide that because I am still young and I don't have too many expenses, it is expected that you save about 20% of whatever for future purposes. So if you save that, and someone did an analysis that, okay, if you save like 20,000 naira every month, from now that you are just getting into employment, in about 40 years time or 45 years time, when you are retiring, that 20,000 naira would have become about 200 million naira. So you can see the power of, provided that you invested, you are not only saving that money, but you invested it in something that will be any certain return for you on a monthly basis. So if you do that, if you set 20,000 naira and you are getting 200 million in 40 years or 45 years time, are you not better in a better position? Would you not become a rich person by that time? So those are the reasons why we need to understand why it is important to study personal finance. If you understand the fact that my 20,000 naira, which I could have used to buy or I could have used to buy shoes for men, nice shoes, nice shirt, designer, or I could have even used to give it away to people. I'm saving that 20,000 naira and I'm religious about it for over a period of 45, and at the end of the day, I'll be in 200 and something million savings at that time. So we cannot see that it is very important for us to understand that savings is important. Now, if you are in this position, if you earn 20, you are saving 20%, you should also be able to invest the remaining. So in remaining, in some, at this level you are, you can muzzle risk as much as possible. So you can invest the remaining, maybe 30% of whatever remaining in investment. It might be in equity, it might be in shares, or whatever you call it. But at this time, you should be able to, because your expenses is still at minimum. So that is a general rule of thumb for you. And then a general rule of thumb is that at this age, you should have a net worth of your annual salary. That's in general. And to tell you the truth, I have practiced this and I know it can occur. It can happen. So it's just for us to be committed, and be religious about it, and we'll see it working for us. So the general rule of thumb says that if I am within the age of 30s and 50s and I am in employment, it is expected that at the age of maybe 35, you should have saved, or at the age of 30, you should have taken twice of your salary, or at the age of 40, you should have saved 3 times your salary, and at the age of 50, you should have saved about 4 times your salary. So those are the general rule of thumb. So of it, we can take time and read the other things that have been said there. So so once we understand this general rule of thumb, we can now go to our statement of net worth and see whether we are meeting this general rule of thumb that will help us to achieve a very well and stable financial position in future. So, for instance, this person is not yet meeting general rule of thumb. You understand? It means that when I finish preparing my statement of net worth, it means that if I'm not yet able to attain this general rule of thumb, the question is actually to start now. You know, something that we have not done does not mean, even if it takes us 30 years or something, once you have started, you can reward. So there is a computation that helps us to determine whether our net worth is also adequate or not. This formula may not apply for people that are just starting work or something like that, but for us that have been in employment, if there is a formula that says that your net worth should be about your age times your pre-tax income divided by 10. So for instance, if I have a pre-tax income of 30 million, hypothetical example, so I am 40. So what should my what's it called, my net worth be? So it should be 40 times your 30 divided by 10. That should be your net worth. By the time you calculate it and check if you are in that position. Otherwise, if you are not, then you know that yes, that you still have a lot of work to do in terms of how to manage your finance. So I will talk about this where we go. So the second thing on how to create wealth. In order to create wealth, I said, you see, organization on a yearly basis, they prepare their yearly budget. Some do 5-year plan, some do 10 years plan. So it is important as an individual to sit down and think about it. Prepare your budget monthly. And when you are preparing it, you think about where do I want to be in the next, maybe in the next 1 year, in the next 5 years, in the next, there. Because when you are able to determine and understand that, it will help you to know better on how to better prepare your budget on a monthly basis. So a budget is simply an estimate of your income and expenditure for a set period of time. So a time can be monthly, can be quarterly, can be yearly, or whatever it may be. So at the end, at the beginning of a year, for instance, you can decide that let me spread my spreadsheet to see what I will be or what it will look like in a year. So you look at all your income, maybe where your sources of income, maybe your salary, your bonus, your rental income, or as the case may be, you look at all of them, and then you look at all the income that you are earning from your investments, whatever it is. You look at all the income. Then you look at all your expenses, what my rent, your this. You put them on a spreadsheet. Now, if you look at it, this helps you. What does it help you to do? It helps you to know how to follow the rule of achieving a good net worth. Now you can decide that, we have said that depending on the scale you have, you can decide that I want to be saving 20% every month. So on your spreadsheet, you have already included this savings there. So it helps you to better know, even with this savings, how much will I have left? If I know that this is what I have left, then what better alternative use can I make use with the fund I have left? It is very important for us to know that if we just continue to save, let's assume our expenses are, let's say, 60% or 50% of our total income, and we just continue to save 50, the remaining 50% in cash. The truth is that by the time you look at the inflation risk, you look at currency risk, you might end up being worse off, because there are various opportunities available for you to invest your funds. You can imagine if Dangote, when he started trading at that time, when he was young and when he left school, and he started trading and kept on keeping his cash in the bank for a long period of time, I don't think he will be the richest man in the world, in Africa now. So it is very important for us to know that when we earn a living and we excess cash, we should judiciously use that excess cash in investment. So the general rule of thumb when it comes to your budgeting is, and there are so many people that have come up with so many rules, but what have worked for me or for us, I will let you know. So the budget rule, some say there's a 50-20-30 budget rule. The first one is you spend 50%. It means that 50% of my income must be you spend it for whatever your expenses are: housing, utility, consumables, groceries, anything you call it, any of your expenses. The 20% of it says that you should save 20% of it for your pay down debt, emergency fund, and investing. Some say 30% should be for discretionary and other spending activities. Why I really do not support this is that if you follow this rule, you might end up not being, if you follow this, you compare yourself with some other people that will follow another rule, that person will be in a better statement of net worth than you. So another rule says there's a 50-20-30 rules. So the 50% of your current, let's assume I'm earning 1 million per month. So 50% of it will go for recurrent expenditure, including rent and all that, while 20% of it will go for savings, and 30% of it for investment. Now, the truth of the matter is that we need to understand the environment we are in. In Nigeria, the prices of food, the prices of goods and services have increased significantly over this period. Currently, inflation rate is about 15.75%. So if you look at that, this 50% rule may not work, depending on you. So if you are still within a 50-60% rule, it's still a very good position for you. So if you work 50-60% and you manage your 40% strictly on investment, forgetting all those other activities. So for instance, if I have a share B or whatever we call it, I can't take from my 40%. My 40% is strictly for investment. If I do that, I will be able to sustain my wealth. So I'll be able to sustain my wealth. So now there are some ratios that we calculate. They are very simple to calculate. That helps you to be in a better position to manage your net worth. So the first thing, which is very critical to any organization, whether you are into manufacturing, no matter the sectors you are in, is your liquidity. Also, similar things for individual. If you are an individual, your liquidity is very critical for you. So liquidity ratio is just liquid asset divided by the monthly expenses. So if I have a total of 10 million liquid asset, and your liquid asset is money that you can easily convert to cash, without it necessarily impairing the principal. So if you have, for instance, a principal investment in fixed deposits of about 10 million, it can qualify for a fixed asset. So because it is not impairing your principal. So liquid asset divided by my monthly expenses, and I have a monthly expense of 500. You will see that I will still be in a good position. So it is expected that your liquidity ratio, to know that you are even comfortable a little, that if in the event of any unforeseen circumstances, event that I lose my employment, I should have at least 6 months of my 6 months of my expenses or liquidity in place. But preferably, for you to be in a better position, you need to have about 12 months of it, or even more. As we grow, because you are just starting, you can, give yourself a target. I want to have a 6 months of this liquidity in my position. So that is a target for you. So for emergency fund, it's just your 6 months expenses for emergency fund. So your 6 monthly expenses could be for your emergency fund. But I don't know what the emergency fund. So the question when I was preparing this, they said 6 month expenses. So if for instance, if I'm having 500,000 naira monthly expenses, hypothetically, that means for 6 months I should have about 3 million for emergency. And I'm thinking about myself, that is this not too high? If I keep just my emergency for emergency expenses, I'm keeping 3 million as just emergency. So what I just told myself is that, what are the emergency things that we can have? Okay, my roof is leaking. Will that cost me up to that? So you must be intentional about personal finance. So once you identify those emergency things, can I pass those risks to someone else? That would be my question. Can I pass it to an insurance company, or for instance, so that I don't end up having that 3 million just lying down fallow? I can use that 3 million for an investment. So you must be intentional about emergency. It's a lot of thinking that we go, because of our time, I need to rush. So the ratios are important for you to know when it comes to personal finance. You want to know your liquidity ratio. You want to know your statement of net worth. You want to know your statement of net worth. You want to know I want to take us to the major areas. Want to know my savings ratio, which we said that it should be about 20% when you are still young, should be 15% when you are in your middle age, and then it grows back when you are above 50, because it is expected that by that time you would have sent your student to school and you would have finished there. So that should be your savings ratio. So there are a lot of ratios that you need to mention yourself, but another very important ratio that you need to learn, 120 minus my age. So if I have I am 40 years, so 120 minus 40 means 80. Risk at this point, 80% of it in stocks or bonds or whatever I call it, and then the remaining 30% can be in lower risk asset. So that is what investing ratio is. We need to understand where we are in a position in life. If you're in the middle age, you know that at that time I can still take up a little bit more risk. But if I'm getting to my retirement age, the level of my risk can change. But however, that does not end. If you are getting to your retirement age and your savings or your retirement, your savings, your retirement ratios can accommodate you for your lifetime, you can still take up higher risk. So all these things all depends on where you are financially, where you are in terms of age, to be able to determine what investment you can take up. Now, quickly, I will just quickly run because time is going right now. So the question is now, you know, if we look at sometimes, you look at our network, we realize that if we don't manage our network properly, we will end up going back to where we were. So, for instance, someone who had a property, for instance, and failed to insure that property in the event of is it fire or any incident, you know, that means, and it has lost value of about 30 million. If the property was 60 and has lost value of about 30 million, that means the person's statement of net worth will reduce immediately. So it is important for us to know how do we sustain our health. One of the ways we sustain our wealth is that anything that can be insured, insure it. Why? Because you know that insurance will indemnify you to the position you were at the time of the loss. So insurance is a very key thing. So you must insure your assets. Don't overlook it and look at that the cost is so high. The cost is so minimal. If you get a good insurance company, good broker, they will do the right thing for you. So you must protect yourself, protect your properties, protect your personal life, protect whatever you can protect. Pass on the risk. That is what risk management is all about. If you can pass on the risk, then you can take up more risk. So that is very important. Pass on the risks to people and you can take up more risk. There are so many other things that I've listed here, but because of time, I would love to go on to the next thing, which talks about how to grow your. There are two major ways you can grow your wealth. Income can be your earned income, maybe your salary or whatever you call it, your passive income also. But if you really look at it very well, we have to think, because to grow your wealth is not an easy thing. It's more, you must be determined about it, yeah, that you want to really grow your wealth. I don't want to remain where I am, grow my wealth. So the first thing that can quickly take you to grow your wealth is looking at your competence and skill. If you look at what competence do you have, what skills do you have, that if I sell this skill out, I'll be able to increase my salary, yeah, or even earn more income for myself. So that is very important, and that is why we must take cognizance of the fact that we must educate. Education is very key so that we can improve our net worth. You want to get more net worth, you want to become more rich, you need to educate yourself. So that's very important. So another way, because of our time, just go to the next, the last one. Another way where you can is that creating value by solving. So the very most, you know, if we invest in bonds, we invest in treasury bills, we invest in mutual funds, real estate. If you really look at real estate, for instance, the return you can get, I think you can take a calculation of it. It will be about, if you have an average of it, should be about 7%, between 7% and maximum maybe 13-14%. That's even if you are investing in real estate to rent, you know. But if you are investing in real estate, you know, for resale, you may make a better return on that. If you are investing in stocks, we all know what the stock market talks about. The return also, you need to have a professional advice on that to be able to determine that. So treasury bills, we know that it is out of it now. Treasury bills, what is the rate now? Fixed deposit, how much was the rate? They are giving 0.5, 0. So if you are not careful, if you are not that person that really look at your finances, you just see that you are considering the fact that inflation is growing, and your treasury bills is your bond rate is just 0.5, treasury bill is just 0.5. So we must be intentional about it to be able to look at some of the various places that we can get more return of our investment, because that is key for growing your wealth. So I will say, so the major thing that can easily grow your wealth, if you look at the people that have been, that just the richest people in the world or in Africa, you will see that the major place that they really grew their wealth is in investment in equity, of a company. So it's either they set up that business or they went into joint ventures with some other people, to grow your wealth. So it is in that area. And what they normally do is to look at a place, a problem, and find a way of solving that. So in order to grow your wealth significantly, if you want to grow your wealth significantly, it is important for you to look in that direction. So I will just talk to us. I have said all these jargons and all this, but very key as an employee, or even if you are not an employee, that 4 major things that even you don't need cash to be able to become. 4 major things that you need: your integrity, your relationship, and your vision. And with God, everything will be possible. So I have just three quotes that has been helping me over the years. I said integrity is the pathway to unlocking your success. So if you want to unlock your success, you don't need money. Just have that integrity. I've realized that since I left employment last year, I realized that a lot of people are looking for who and who to assist, who are who to give fund, to help them grow their funds and investment. So you don't need money. Integrity is key in life. I said challenge is the most powerful catalyst of growth. The truth is that if you don't face any challenge, you will not think of a better way. So when you have challenges, just know that you are ready for. If you ride on that challenges, know that you are on the path of growth. I said a life of impact is what is called success. So success is not measured by not only by money, but how impactful you have been. Thank you so much for listening, and thank you to the organizers.
Wow, what a wonderful presentation. I've gotten a lot of this presentation. It's quite concise, on point, and I have so many things to run with going forward. So let me just summarize a little bit from what she explained to us. She started by explaining the importance of personal finance and how it impacts our life, health, and security. She laid emphasis on financial management and sustenance all through her presentation, and she gave us insight into what personal finance is all about in terms of income generation, spending, savings, investing, and also protection. And throughout her presentation, she focuses on 3 major areas, which is creating wealth, sustaining wealth, and also growing wealth. Under the creating wealth session, she taught us how to develop a very simple statement of net worth, which is basically how much you own minus what you owe. Fantastic. She also showed us how to develop assets in order of liquidity. That's when we are developing this statement of net worth. She related age to what your net worth should look like. So she even gave us formula to calculate the net worth, which is age multiplied by your pre-tax income divided by 10. And under there, she also said there's something about budget planning that is very, very crucial for us to plan our budgets. And she gave us a rule, a 50-20-30 rule. 50% you can spend on your needs, 20% you save it, and 30% you put on your investment to be able to meet up with the net worth calculation. And she also talked about sustaining wealth. She gave us pathway to sustaining our wealth. She encouraged us to learn about personal finance ratios, liquidity ratios, emergency fund ratio, savings ratio, investments ratio. I'm sure if we go online, we can learn more from this and how those KPIs can be used to sustain our wealth. Also, she encouraged us to insure our assets, and lastly, she talked about growing our wealth. She talked about us improving our competence and skills and also monetizing it. She also talked about us putting control in place so that we don't overspend.
So thank you for joining us in this webinar. Like Stella has just summarized, it has been a whole load of valuable information around personal finance, how we can, grow that wealth, how we can sustain that wealth. So Stella, over to you.
Okay, sorry, I got cut off. Yeah, so sometimes. So, but my last point after growing wealth, I believe you heard about my explanation. I mean, the recapping of growing wealth. So, where she talked about improving our competence and monetizing, what we can do, and also putting some control in place so that we don't overspend. And then finally, getting additional source of income. She talked about stocks and all those things that we can invest in, and then lastly, she gave us some excellent quotes, which is something that I hold dearly. The first one was, integrity is the pathway to unlocking your success. Wow, that's something that I'm going to tweet out after this meeting. And then she also talked about challenges is the most powerful catalyst of growth. Right on it. So when we face challenges, we should know that it's going to propel us to growth. Wow, that's fantastic. And lastly, she said a life of impact is what is called success. Thank you so much, Mrs. Adebola Agunbiade. I mean, I've learned a lot from your presentation. So I'll go ahead and make a few announcements. Okay, sorry. Question Q&A session. So I have one question here about ensuring your wealth. Somebody is asking, how do you insure your wealth? Because you said we should, insure all our assets and things like that. So, like maybe for your savings, that you have in the bank, things like that. How can you insure that?
Thank you very much. That's a very lovely question. Okay. For instance, if you have a fixed deposit in the bank, if you have what's it called now? Maybe bonds, treasury bills. Those are, those are okay. Treasury bill is no risk investment. However, I'm going to say this because you must have a diversified portfolio. If you say because treasury bill is no risk, investment, and you want to fully concentrate on treasury bills, you will realize that you will not end up growing your wealth if you are not careful. So there are so many, ways that you can generate more income than what you are generating in treasury bills. There are all that fixed income instrument that you can also deal with. You can also invest in that will earn you, as at now, you can earn about 10% of it as your income on it. Now, how do you manage that? How do you secure it, right? We must understand that if you fail to take risk, and you will then you just remain where you are, or you diminish if you are not careful. So risk taking is a critical aspect of growing your wealth. So the only way you can manage your investment, if it is in other places, is to ensure that you have someone that you trust in that place that will ensure your asset is protected. Someone with integrity that will ensure your asset is protected as much as possible. So for other ways of protecting your asset, so for instance, if you have vehicles, motor vehicle, you can insure your vehicle. You know that insurance will protect that we give you, indemnify you in case of a loss. For property, you can insure your property. For instance, you can have a life insurance scheme. A life insurance scheme, some life insurance scheme, we protect that fund for you, and as well as give you additional, additional funding in the event of death. So those are some of the ways you can protect your asset. Growing your wealth involves risk taking. Let me just say that.
Thank you, Ma. I have another question here. The person is asking what really happened to treasury bills. Please, Ma, can you explain why the return on investments is reduced as we speak?
I think basically it's a way of government helping the economy. When the interest rates are reduced, lending rates, it has a direct effect on lending rate. It's expected to reduce in some proportion to it. So it's basically a way by which CBN tries to stimulate the economy. So that's basically what happened in it. Now, and I think, for instance, it is a good one. But it is a very good one. But the issue I just have it is in the fact that it's, apart from it, when it is expected that when the rates are low, it is expected that there will be more investment in productive sectors. But to my dismay, I still see a lot of funds lying there fallow in fixed deposits in the bank. So the risk appetite of the Nigerian people is quite low, and government is trying to encourage them. So they are trying to discourage them from putting their funds in fixed deposit, rather in using those funds for productive sector. So that's just the essence of that, why it is currently.
Okay, thank you, Ma. So there's another question here. Somebody is asking if it's advisable to really save your money for a long time, as long as 40 years, because you earlier said something about uprising inflation rates as we experience in Nigeria. So once the money is saved, for over a long period of time, it might not in future, it might not you know, make meaningful sense anymore. So what's your advice, Ma? What's your advice?
Okay, the truth is that savings is very critical. You need to understand. If we look at, you know, I said something while I was talking. I said, look at organizations. Personal, if you look at yourself as as an organization, you see them having reserves, statutory reserves, general reserves, all those reserves. Those reserves are kept for future unforeseen circumstances. Now, I quite agree there will be an element of inflation risk in that investment, but what about the risk of the health to you? So in anything you are doing, you look at the cost and benefit of it. So the cost and benefit of it is very critical. So what is the benefit of it? The benefit of it is in the event unforeseen circumstances happens, I will be in a better position than where I am. Not be mindful of that. We need also understand that when you have reached a certain cash level. So, for instance, I am age. You know, I said it while I was saying. So I am age. Let's say I am age 50 years, for instance, and I have in my cash savings, and my recurrent expenditure is about, let's say, 1 million. I'm giving an hypothetical example, per month. So 1 million per month, or times 12, or let me average it about 10 million per annum. So 10 million per annum, I still have an average of, let's say, 40 years to live. You understand? So 10 times 40, for instance, will give me, I'm just giving, will give me like roughly about 400 million or whatever thereabout. And you will realize that your investment or thereabout in your cash or something has grown to that level, or something that will make you to cushion yourself. You know, I'm age 50, I'm already retiring, I'm just giving that. So that means I can stop saving towards that, and I cannot decide that the money I'm allocating for my savings, I want to allocate for further investment. So that is the way you look at yourself as you go, and that's why I didn't mention this while I was, but it's part of the presentation, that you need to see your position, your net worth, statement of net worth, on a yearly basis or half yearly basis, you know, in organization quarterly, to be able to determine what next of line of action to take. Thank you very much.
Okay, I have another question here. Somebody is asking if gambling is an investment.
I don't want to talk in line, you know, spiritual, like, you understand.
Yeah.
What is gambling? What is gambling? Gambling is just like, okay, what do they call it to you, ba? Is that
Exactly?
So for me personally, I don't like taking up an investment that I have not calculated in one way or the other. Leaving all other things, I don't know, bearing all other things in future. But I take a risk that I've calculated. You know, a calculated risk always help you to achieve your, you know, your aim or your goal in life. So I would rather say, for me, gambling is not an investment because it's not calculated. I would rather dwell more on some calculated risk that can help me grow my wealth, that will give me peace of mind.
Okay.
Thank you.
Thank you, Ma, for the answer. This is our last question. Somebody is asking if that you should share practical financial steps to take to have a good retirement.
Okay, I should share practical financial steps. Okay, yes. I think okay. Let me just say this: to have a good retirement is you must have a savings culture. A savings culture that is very good, very critical. I think if you are in employment, pension has made life easier for you. You have pension. Additionally, you can decide to have pension your additional life pension for yourself. But while doing this, while saving savings, it is important for you to think of yourself. Okay, if I'm going to have a good retirement, how much do you think? You have to incorporate inflation into your calculation and the likely currency that will happen. So how much do I think I will be able to, I said what my expenses, recurrent expenses, in addition to living a very good lifestyle. I want to travel out and I want to enjoy myself, I want to have a lavish, a big car. I want to live in this kind of. So by the time you put all those into composition, then you will now be able to determine what is the present value of that, what you are putting into consideration, and then be able to walk around it to see what the future will like. It's a whole lot of computations, but those are the practical steps you can take. Determine in a simple layman person, just say, okay, I want to be able to have, okay, let's assume inflation increased by 10% per annum. I should be able to have about, okay, if it's 10 million is my, or 15 million is my, 10 million is my expenses. So in next year time, I should be able to, my expenses would have grown to about 1.1 million. Do you understand? So by the time you calculate in a simple layman's time now, by the time you calculate that, it will help you to determine how much you should save now and how much your retirement savings should be like.
Wow. Thank you so much, Ma. Thank you. Thank you so much.
Thanks for having me.
For the presentation. Personally, my takeaway from this presentation is you said something about looking at ourselves as an organization. That is very, very key. As an organization, we should have a budget, we should have all these plans in place. So that's the key takeaway for me. Thank you so much, Ma. Okay, so let's just take a few announcements. We have 2 upcoming activities. The first one is the Vision Board event for February 6, 2021. And the second one is actually a webinar like this, where we'll be talking about how to meet our health goals for 2021. Dr. Adeze Ifezuluke will be the one taking us, teaching us how to set smart health goals, and also, showing us how we can maintain excellent physical, mental, and emotional health throughout 2021. I'm sure, after this presentation, we'll be sending you these flyers and to your emails. Thank you so much. So you can connect with SPE Lagos Section through our social media handles, LinkedIn by going to SPE Lagos Section 61. You can follow us on Twitter and Instagram, SPE_Lagos, and you can also connect with us on Facebook, SPE.Lagos, and all our videos, they are on YouTube. Just visit SPE Lagos, you'll be able to see them. Kindly connect with us, follow and share some of our flyers, all the things that we post, for your information. Thank you so much. And for further inquiries on how to register with SPE or how to renew membership, you can contact Odion at spelagos@gmail.com or Chimere at greatchimo@yahoo.com or myself at eitayodostella@gmail.com. And in case you need to speak to any one of us, you can actually reach out to us using the phone number that you see on the screen, or you can visit SPE membership benefits site. Just the link is on the screen. I'm sure you can see it. So thank you so much for attending this webinar. We look forward to you attending much more as we share by email or text message, whichever means that you've registered with us. Thank you so much. Mr. Debola, thank you, Ma. Bye.
Thank you for